Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it's been a relatively quiet day in the markets in terms of news flowing with economic data as well. There's only been one notable economic release throughout the day, and that was the initial jobless claims from the US, which came out slightly better than expected, and which hasn't really had the major impact on the markets. Like I say, it was broadly in line with the numbers that we've been seeing for most of the year. Very strong figures from that sense, which again give a good impression of how the US labour market is performing ahead of tomorrow's non-farm payrolls. I think the key focus today has largely been that payrolls tomorrow. It's been a very busy week, it's worth noting. The first 3 days of the week we've seen a lot more volatility and a lot bigger moves in the financial markets, both in commodities, equities, bonds and FX. So the fact that we had this non-farm payrolls tomorrow, it was no surprise that given it was such a data and no news flow light day that the markets did slow down quite a bit. We have seen it pick up somewhat in the afternoon, which is what we're going to touch on with a few charts though. Mainly in the instruments which we've been touching on in the last few days, the likes of gold, the pound. We've actually seen UK gilt yields rising by around 6 basis points today. I think the movements in the pound right now really are being driven by the anxiety that's being created on the back of these comments which we're getting from the UK government. Theresa May has spoken, Philip Hammond has spoken, the Chancellor, and the commentary which we're getting from these officials and also other officials such as David Davis, the Brexit minister. They're creating a lot of anxiety around in the markets about what Brexit's going to look like. It seems that the government is far more open to something that resembles more of a hard Brexit in a couple of years' time than the soft Brexit which people were really hoping for. I think access to the single market does not seem to be top of the priority, and I think that's made people a bit angsty. And I think there's also some other lines are making people a little bit nervous. So that's really what we're seeing reflected in the markets right now. Actually, if I just bring you up some of these charts, actually, you can see this reflected in the pound. You're also seeing some movements in gold, as I say. But let's start with the pound, because this is where we are seeing some big moves. We saw the breakthrough the post-Brexit lows, which we've touched on in previous videos. That happened a couple of days ago. We saw this dead cat bounce yesterday. A dead cat bounce being where we see a slight pairing of the previous day's move, but likely driven by some form of profit taking. That buying or a profit taking, which is effectively a buy order, doesn't really take hold and create too many longs, and then the selling resumes, and that's exactly what we've seen today. We're now trading back around the low 126 levels as we head into non-farm payrolls. I'll be surprised if we see too much of a significant move now lower ahead of tomorrow's number, just because this is just because of the implications that tomorrow could have for the dollar. A very strong US jobs report, I think, could be quite bullish for the dollar, but more importantly, I think a very weak payrolls could be very bearish for the dollar. Currently, a rate hike, I should say, in December is priced in at around 60% right now, so I do see a lot more downside for the dollar with tomorrow's jobs report, more so than upside. You'll remember that the ADP number, which is seen as an estimate of the NFP on Wednesday, was actually lower than expected. So I think if we do get a weak report, then that could be quite bearish for the US dollar, which could bring some upside in this cable pair, especially given how much downside we've had in recent days. Like I say, around 126 looks to have offered some support in cable right now, but it is worth noting that we're not really seeing any lacking in the momentum stage here. So MACD is continuing to make lower lows, the stochastic is making new lower lows. It's not looking to me like we're seeing any form of divergence forming when these new lower lows are being made. Potentially a little sign on the 4-hour chart here with the MACD histogram making higher lows on the most recent low in cable, but I'm not seeing anything substantial at this moment in time which would make me particularly bullish. It'll just be interesting to see whether we continue to extend this move into tomorrow's Fed meeting, or if we do pare that back. Dollar yen yesterday did close above the Ichimoku cloud, which is something I touched on in the video, and we have built on these gains again today. So that 104.30 now becomes a key level for me, and above here 105.50s. But again, tomorrow's report is crucial. If we do see a bad report, weak dollar, then we could quite easily see some of these moves reverse, and we could see a move back below the cloud. So something just to be wary of right now. But again, it's worth noting that now we are above the cloud, then it's this bottom blue line around the 102.20, 102 to 102.30 level that becomes the key level of support, because we could quite easily see a move back into the cloud, and as long as it finds support above here, then it still remains in bullish territory, which means we could then see a spike higher in the days following. But that's looking nice and bullish right now in dollar yen. The other one I really wanted to touch on is gold. Because we have seen another move lower from these moves on Tuesday. We saw the big sell-off on Tuesday, again a dead cat bounce on Wednesday, and now we're seeing this move extended. We've approached the 1250s already. Very, very quick move off the 1300s. Already we're approaching the 1250s, which is the next major level of support. We've got a big zone of support around here with the moving averages coming into play. I'd say the next level of support to note around here is going to be around these 1235s. We've seen that this was a level of support quite recently, just about here. So these 1235s could be a notable level if we do see it pull to the downside. That would also coincide with the 233 simple moving average, which we've got coming from below here. But like I say, I'll be very surprised if we do see a break below 1250 ahead of the non-farm payrolls, because of the size of the move which we've seen already and how big a support level that is. Again, a stronger dollar does tend to coincide with weaker gold, so if I think we'd have to see a very good non-farm payrolls figure to see a break at this 1250 level, whereas a weak dollar coming off the back of a weak non-farm payrolls we could see it move back in towards this 1270 to 1280 range, and potentially even test $1,300 in the coming days. So like I say, the charts are getting very exciting right now. I do think the markets have picked up quite considerably since the summer, and I think tomorrow's jobs report is only going to help. To find out more about the jobs report, check out the NFP preview video, which we'll be putting out in the next few hours. In that video, I'll go into more detail about the jobs report itself, and also look at a few extra charts, including the ones we've just covered, and also dollar CAD and euro dollar as well. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.